Good morning, well, or afternoon. It's about 12 o'clock, so welcome everybody to Options Tender. If you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. Today we're going to go through SPY on the multiple time frames, monthly going all the way down to the 65. For those that are new here, we have a lot of new people, so again, thanks for all the support, everybody. We want to get some good information out there. So we're going to show the pathway that we think that we're going to go through. We've been talking about it for months, and we talked a little bit about switching the mind frame of what may occur after we get to some of these targets to the downside. Whether you're bull or bear, we're looking to the downside. Now, we're also going to add Apple to the video and do the multiple time frame because I have some great educational information to show you not only pattern recognition, but also some indicators, just some good things to talk about. So we'll get there, and I'll show you, why I think the market could possibly head down to certain levels, and then we'll have to see if we make new highs or if we just get a bounce and head lower. That's the whole point of trading. That's what we're trying to do, is put out our perspectives of what could happen. So if it starts to occur, we can trade in that direction. All right. They call it staying on the right side of the chart. Very good. All right, guys, let's jump into it. We have SPY on the monthly time frame. The most important thing I want to talk about here is the levels that we're going to discuss. Now, I don't have it written here. We have the former all-time highs. That's a important trend line from 2000, from the top of 2000, and it's still possible that we get up to that point. Do we get up there straight up from here? It's possible. The monthly candle's not over, so we don't have much information from that. It's still an inside candle. We start breaking down underneath the candle and look at this, kind of try to either jot down or remember these numbers. We have the 8 EMA. So we're going to get some sort of reaction if we get down to these levels. 8 EMA, I'm highlighting that turquoise trend line. That's the 491 area, okay? Keep that in mind, 491. Now we have the former all-time highs. There's a reason why I'm pointing all of these out. That's around 480. Next big zone, I think that's a big zone here that price action should test. 460. So let's say 490, 480, 460. And then you have a lot of volume in this area, so we're not really going to go through all the levels here. That would be pretty extreme, but it's still possible. Down to these 440 would be the mid-range of this level. But you see all the consolidation here that forms support and resistance. The top here, resistance, all these candles, and then support. And then you have your 20-month simple moving average right here. Okay. Also on this, I want to show you the options tender setup we have here for it's a very common setup, the MACD, looking at negative divergence on the monthly time frame. That's huge. And so we're going to have to coincide that with the weekly time frame next. And I'll show you, we are at downtrend levels here in the RSI, overbought. So here on the RSI, if we eke out a new high here, we're just going to make a lower high here. So that would be a fantastic objective short from that point as well. So we're getting a really early sell signal here. We have the crossover on the slow stochastic. Now that can easily stay oversold or overbought, excuse me. And, we could bounce off of this 80 line here and continue to the upside, but that's still the precursor to what might happen next. And so if we come down to the 80 and hold and make new highs, but also get a divergence here, that's what we'll be looking for, okay? Now let's go over to the weekly time frame. and kind of match what we're talking about here. And those monthly time frames are months to years to form. So they're very, very important for kind of like the headwinds or tailwinds of things. But, they take very, very long time. So a little shorter point of view would be the weekly time frames. And so what are we looking for in the weekly? You see the same thing. We're trying to form out this channel. We do have a channel top here if price wants to go higher. So we have the 8 EMA curling up, got back above it. We're holding it and holding the 20 simple moving average that held for 3 weeks in a row. And we finally had a reversal off of it. I don't think we go directly higher, but anything could happen. Now, what's important on our MACD is we already have our bear cross from this top here. So this gives me a signal that this correction might just be getting started. That's a signal there, but we're well into bull territory that's above the zero line. So there's no negative divergence. So we still have that possibility. All right. So for example, if this is just a first leg and it's just a 3-wave move. So we have an A, B, C, wherever that might end. We're going to see some of these action move down a little bit more. We're going to see, maybe oversold, slow stow, go back down. And then we're going to see another move up. Now, if that up goes all the way to make a new high, a new all-time high, we're going to see negative divergence. And so we're going to be really looking for another top. And it's going to be a serious top, you guys. When we start topping out, it's gonna mark a recession. Okay, I'm telling you, it's gonna mark a recession. Now, what else can we show on here? I think I made my point there. So let's go down to the daily. Trend is our friend, and then I'll start to get to the projections here. So I like to be very thorough. I apologize if this isn't fast enough for you, but I want to get this information out and show you what I'm looking at. This is my perspective, and maybe you can kind of, compare it to what you're looking at on your charts. So I constantly talk about this consolidation area. I would really love to see price action hit that. Now, we had our price target down a little bit lower into this area here. It still may get there, but that's going to be an extreme move. Now that we had such a deep retracement, still possible we get down there, but I think it's less likely. So I moved it up just a little bit to test the the former all-time highs. Now that coincides with this consolidation area. Actually, it matches perfectly with this one here as well. So that also coincides with the 200 simple 200-day moving average. And then we do have lower levels if price wants to do that as well. So the reason why I move this is it seems a lot less likely that this is a 1-2 setup. Now it's such a deep retracement. I think it's going to be a flat pattern. Now, what does that mean? We have a 3-3-5 wave move. So we're going to get an impulse wave down. So 3-3-5. Now that impulse, I'll show you the different targets. This is traditional technical analysis, so I'll get a little bit closer. I do believe we have the top here, so I did adjust that just a little bit. Okay, now we're going to look for different points that the market may stop. So I'm going to call off the 590, 580, 560 area. Here would be an A, B. We break the trend, assuming we break the trend. If we don't break this trend line, then the market's going to go directly up. And this is going to be some sort of three-wave move to the upside for an A, a B, and a C, which is a 5-wave move up. So you say, hey, that's a corrective move, ABC, right? Well, I'll show you just in a few minutes that we're looking at this being a possible ending diagonal, and that would be a 3-wave move to complete that 5-wave series. Okay. Anyway, if and when, and I have these direct arrows on the 65 minute, but I'll show you from the daily time frame perspective as well. Break this trend line, I say we go down, and they call it testing the lows. But this would make a perfect flag pattern opportunity right here to that 491. See that 490 area that I was talking about? Hold this zone, and this could be the flag that would be an ABC for 100% extension from wave A. So that would be very symmetrical. A equals C, and that would bring us right down to these levels. Now, flat patterns don't always happen like that. So I'm going to show you on Apple one small example on the 65 of what I'm talking about. So it can extend all the way to the 162 extension, and that brings us down to these levels. But this is the former all-time high. That's the 480 area that I was talking about. That's the top of the zone. And down here at the 470, I think I said 460, 470 would be the bottom of this consolidation. And also right around that area is the 162% extension of A, and C would be the 162% extension of A from the top of B. And that also has a 200-day moving average. 200-day moving average price usually doesn't just go touch it and bounce off of directly. Usually there's a big spike below it and regain, or it just doesn't even hit. It comes close and fakes you out, gets in early. So let's move down to the 65 and kind of, well, no. Let's go over to the price projection for the new people here. So we haven't changed either one of these. This is an ending diagonal, and this is expanding ending diagonal. This is now our secondary. This was our primary as of last week, and then we got this deep retracement. So it's kind of changing my perspective. It doesn't mean that this cannot occur. It just means that visually, this is less likely, just probabilistically. Okay, if that's a word. So we're looking at this being a major top, where this is an expanding ending diagonal, where this is a 1, 3-wave move into 1, down to 2, starting to expand 3, momentum's going to 4, momentum blow off top is into 5, and now we're looking at an initial 1, 2, and then wave 3 would be projected. I don't know if that's exact yet, but wave 3 would be projected at that 173. That's where I was talking about. So that brings us in the center of that corrective move. Okay, so I said the bottom, but the center, right where all that volume is, right? We have a volume node right there, and that will coincide right with the 200 as time kind of passes by here. Okay, so that would be wave 3, and so that would get all the bulls in and the bears in. Everybody's going to be in at this point, and somebody's going to get their heart broken, where this possible ABC would end, or we just get a bounce and we have a 4 and a 5, a wave 5 down lower. That to me would start to signal that this would come back into our primary situation, where we're looking for a 5-wave move down. So in this situation, we're looking for an impulse wave, and then a nice sharp bounce, and then lower. Okay, now our primary, just for our mind frame to be, is that we get a correction, and that this is an ending diagonal where we have one more move up to all-time highs. Now this move would be a 3-wave move up for a 1, much larger one than we talked about in the last view. A 2, wave 3 is larger, so that opens up wave 5 to be whatever it wants, as long as wave 3 is larger than wave 1. So wave 3 cannot be the shortest. And now we're looking for the A, B. I think B may be complete here. and then a C. And then we have a target, possible target, all the way up here at the 560 area. I know that's a big move, but if we get a nice big correction, all of our indicators are going to be reset. They're probably going to be oversold, and then we have much more room to head to the upside until we get to some certain targets. Now let's talk about flat patterns just a little bit. Now I have this AB where B is possibly, let's dig in a little bit closer here. I have some time relationships we'll talk about too. So today is the 13th. We're at that day right there. So that's the gray line, the gray vertical line. So I do suspect that this is the high for now. But if B would have got just a little bit higher, I still would have considered this the same thing. When you're talking about flat patterns, if we're looking for a new all-time high, this only we can create a divergence and then we head lower. So a flat pattern, go ahead and look it up. All the information's on the internet. You can have a regular flat where it's A, B, and C, and we get that flat pattern right down to the 100%, where this is a 3, 3, 5. All of them are going to be 3, 3, 5s. Okay, and that would be a beautiful, symmetrical, shiny little move, and then we head higher. Now, the market likes to mess people up, so there could be an expanded flat where A, we get a new high to B, and then we get a much slower move for an expanded flat. And then the last one would be where we get a new high again, where A, let's see, running flat, which would be much more bullish. You get a new all-time high with a B, and then you make a higher low with a C, and price continues up higher much faster. So that would be a much more bullish scenario. But we're talking about a flat pattern to where we get a lower high of the B, and we'll call it an irregular flat pattern, where that C just moves much sharper to the downside and surpasses this 100%. So I think that's a really good possibility, but we're going to have to obey and respect all of these levels that possibly could be the buying point for a new high, or at least at minimum a bounce. So I think the much sharper move to the downside would create a lot more havoc for the bulls and bears. I think that's kind of what I'm looking for mentally, is that we get down to some of these lower points. The 162, the 200-day moving average. And now as far as time relationships, I'll create another one as soon as this high is confirmed. I'll create and see if there's any more relationships coming up. But the 528 on the daily is the next one. So we're looking at the end of May for any sort of turn or any significant bounce or anything like that. So that's not a whole lot of time. That's just a couple weeks away where we do make a move. Now, if price gets much lower and it comes into this 491 area on 528 on May 28th, that's going to be a really good spot for at minimum a bounce, but for something to occur. So if price is way down here in just a couple weeks, that's a pretty devastating drop. We'll be looking for a low on and around that day. Okay, same thing for if price gets to the, it doesn't have to be at any of these points. Maybe that's just a bounce. We get some sort of consolidation and it goes lower into the mid-June, and then we'll be looking for something to occur at that point too. So wherever price is, price doesn't show direction, or excuse me, time doesn't show direction, but wherever price ends up on the 528, even if it's higher, 528, then we're looking for a high. So just keep that in mind. So the next one is in a couple weeks here. But today, we're looking for a top at 513. Looks like a good top. Now we can go down to, I think that's everything on the daily time frame. Again, we're going to go through Apple, so make sure you stick around. If you're only interested in Apple, I respect your guys' time. I know that these videos they happen often, so make sure you hit that notification button, and you can just zoom into, just zoom past and go to Apple if you like to. But we're trying to learn different things and compare both of them. So here I'm starting to create images that will allow me to see what the market's doing. So I extended, you see we had this former channel that we broke out of. It's not a true channel. We don't have a bottom yet, but I kept and just extended out the bottom area because that could be at any point, that could be where price gets to. And I want to keep that as a reference for this, the bottom to coincide with one of those horizontal supports and resistance. So I always think that the horizontal support is much more important. They don't move. They're very good zones. So when one coincides and we get confluence from this bottom channel, it would be a fake break back into the channel. Then I think that, or at that point, really what I'm going to do is draw this channel. This would be the mid line. And you'll see later on, but I'll actually draw a channel top from this point parallel with this one. And so that could mark a top, and we could be in a channel to the downside, going much further. So there's things that develop as time goes, but this will be the bottom for now. And we'll look to see as price gets to these channel bottoms, or even if it does, so here, let me just jump into, we have our initial move. We have an expanding wedge, potential top here. Our first zone, this arrow, is this rising trend line. You break down from there. This is our next zone, 491. Break down from here, you'll probably see a reaction, but break down from here, or a gap under, you have our former all-time high. Now you have this consolidation area. I think this is the zone we're kind of looking for. This is that 472. That's that extension. 162 from wave A to B, or possible 1, 2, 3, all the way down to here. That would be a huge potential area. Let's say we make it, this would be probably around that end of May right here. If that, let me draw a vertical line here. That vertical line, if we make it there, that looks like 421. 521. Let me go to 528 and just keep this as a reference. We'll use that as our target. So we'll use that as a reference. So as price gets down into this 528, if that's where it's going, I'm just keeping this for a time reference. Maybe it gets down to here by 528. I think that would be a great buy for a minimum, a bounce. Okay? And then we'll draw a channel, and that bounce might fail and go down to the next, but 528 is our next zone. So if we're down here at 528, that huge area we're talking about, the extension, maybe we even spike through there a little bit, then that will be, by then, that huge move, that'll be a fantastic buy opportunity for at least a back test of this channel breakdown. If we break down from here, I think that would be a great back test. And then we'll have to see if we go down to another low, and that would be a 1, 2, 3, 4, and 5. All right, you see where I'm going with this? This could be A, B, C, and done up. A, B, C, done and up. But if we fail, remember that this will be a downtrend. We have to respect the downtrend at that time. And as we start, this will probably, if this is a bullish setup, we'll probably see a wedge form into this zone. And then we'll have, we'll talk about that later on. So I don't want to get way too far ahead. But remember, 528, mark that in your calendar. Time is more important than price. And then we'll compare that. So let's look at that one more time before we go to Apple. We have some new references that I'm adding on here. And so right now we have this cluster at 513. We have this marked as, we do have a 5-wave move here. That's how we mark it, but it also can be counted as an ABC. So into an A or a 1. B all the way up at this 89% retracement. Nice deep retracement. That's why I'm calling it an AB. And then now we're going to look for an impulse wave down. So our first kind of cluster here, as I clean this up, will be coming up soon here into, it looks like Wednesday, the CPI. So kind of keep an eye on this. I have to clear some of these out. But we do have some sort of cluster going on here. Midweek, we have CPI on Wednesday, PPI tomorrow, and then we'll see some more clusters kind of happen. These are very short-term clusters, so they're not as important as the 28th, but you'll notice that we have some of these references as I make them. I bet you will start pointing. We have 530 here. I bet you anything. I would bet you anything they're going to come out to 528, but I have to build these on the lower time frame to start making these clusters, okay? All right. I think that, let me zoom out a bit. I think that might be it. That's, again, so on Elliott or Fibonacci terms, the A, B, C could either end at that 100%. I don't think I have it on there. 100%. And you see that kind of just coincides with this zone here. Could stop there. Then we have the 38.2. That might get a reaction. I know that it might spike through it, but that starts the top of this consolidation. The 38.2 would say, hey, this is a ABC into a wave 4, and that's very typical for a 4 to get into that 382 retracement. And that's a retracement from this bottom to this top. All right, and that would be wave 3. If we're going to go higher to new all-time highs, that's wave 3. And so a 382 would be a typical zone to pull back into for wave 4. That's very common. Now, notice between the 382 and this 50%, that's where everything starts to happen. This is the midpoint at the 162 extension of A to C. And then a little bit more extreme would be this 50%. So this is a great zone for a pullback. And if we're going higher to all-time highs, this zone is going to hold because this is a potential wave 4. You said, well, wave 4s don't typically go to 50%, right? Well, in an ending diagonal, it can. As a matter of fact, it will probably cross wave 1. If this is considered wave 1 in this scenario, price can even go lower, cross that wave 1, and still be a wave 4 as it's such a deep retracement, and go for a wave 5 higher. A lot of information at a lot of levels. They're not going to make it easy. So let's go spend a lot of time here. Let's go to, first of all, the VIX, and then Apple. We're just going to take a quick look at the VIX. You see this falling wedge that we have here. We hit that support line. We're back above the 13. We'll see where this goes. We need to break above here. That's a 50 simple moving average coinciding with this falling wedge. We get above there, then we're going to start our correction on the market. Okay, now Apple. I want to show you some things on Apple, and then we'll get down to 65. We're going to move much faster in Apple. I don't have a whole bunch to show you on there, but we can learn some things off of there. Apple creates trend lines all over the place, so we have to be careful because they'll break through trend lines and break below trend lines. But you see this former high here, it became very important. We got above it, retested, and moving higher from there. We're still in a bullish stance, but this low touches here, here, here. It's a very valid trend line. And guess what we're doing? We're just back testing that trend line. It seemed like a devastating move to the downside. Apple's getting ripped apart. But all we're doing, this is a very small move, back testing on the monthly, and it could be going much, much lower. So that's one way to look at it. But being how Apple is, we could have still one more move to the upside to retest this trend line going up. So if the market is going up, Apple's going to probably catch up and hit a new all-time high here before heading lower. So, but this is an objective short. We went short on Apple today in the options guys room. And I put out that trade alert, and I showed you a couple charts on how. So feel free to jump in there. It's free. Let's take a look at our indicators on the MACD. We're so much in a bearish, crossover, heading lower, downtrend with negative divergence. So we have to respect the fact that we could just be backtesting here. If we get higher and go to the next level, we're looking for a setup to go much, much lower. Either way, it could be directly from here. It could be a little bit higher. So notice we're in the bull territory, but negative divergence on the monthly time frame. My gosh, that's pretty big. So the slow stoat didn't quite get to the oversold area, but seems to want to bounce. Maybe we go just a little bit lower to this trend line here before we get the new highs. So we'll keep an eye on Apple. What's the point of me saying this? It's just learning. It's just learning that behavior of the market. We have these objective shorts, but if we know we're wrong, if we get above it, now we know not to be short anymore. The weekly time frame. Weekly time frame, we're kind of jumping around this level here. It's a pretty important level at this 175. Got back above it, so we're in a bullish stance right now. In this, to me, could mean two things. This could be the end of the move, being a three-wave move. Apple likes to do all sorts of things. This could be an ending diagonal where it's a three-wave move up, or this is the top here, a lesser degree top, and this is a 3, 3. Notice we get a new high. That's why I described it earlier. The B got a new all-time high, and we sold off. And so this would be an expanded flat. It's a possible expanded flat, and price breaks higher. So either way, I do think Apple can go straight through, but I do think if the market heads lower, Apple might turn around and either make a lower high, or a higher low, down low, and then go to new all-time highs. Or like I said, this is in a stance to where it could just keep heading lower. Now, you get these two different perspectives. So really, we're kind of a neutral area. Couldn't really tell you. I do think Apple goes a little bit lower no matter what first. And now we're in this downtrend line. So I put this downtrend line in the Discord. We're at it. We get above it, then Apple's probably going to continue to the upside. But from here, I do think we pull back. There's some consolidation. There's support. There's a gap. Apple could hold. If the market starts holding lower, gets as this pulls back and the market pulls back, and let's say Apple holds this and goes to break out from the downtrend, we're probably going to start seeing the market hold its ground also. So a lot of things to kind of look at. We close this gap here. let's go to the 65, and now I'll show you a flat pattern example in 65 minute. So we're at that downtrend line, getting kind of above it here. We're actually almost to the options expected move, so I do expect it to get there. I wanted to touch the stop here, but really this could be about right there. Would have all these touches in there, and that top, so that would have all the wicks in there, maybe just a little bit higher too. So you always adjust these. I know some people say, you just keep moving lines over and over, but whatever, that's how we do things. So we do have a little bit more room here to go, possibly even close the gap to get our reversal, but we have a little bit of time here on, we went for this week's expiration to go down. So if the market's going to head lower ending into today, then I think Apple's going to pull back too. So Apple could pull back to this nice level 175 that I was talking about. Beautiful level, close some of the gap, and that would just be a back test of this channel and then head higher. Okay, so that's one possible scenario. We break down from this channel, and that would just make this a much larger corrective move. We have an A, possibly a B, and then maybe we head to new lows and respect the a downtrend. I'm not going to show that lower, but that would mean the market's probably moving pretty heavily to the downside as well. So you just have to keep looking at these mega tech stocks. Look at VIX. Look at all these little clues to tell you if the market's going down, if it's going to continue to go down. Maybe Nvidia's crashing, Apple's crashing, and you can't expect the market to stop going to the downside if those things are happening from some of these big guys here, especially if all of them start to coincide with their move. Okay, now if you have two or three like today going against each other, now you know the market's not going to move very much. You have Nvidia going up, Tesla was up 3% or so. You have all the rest of them going down, Apple up. They're a mixed bag of moves. So the market's really not doing a whole lot. It's still sitting at 0.07. Okay, so those are the things I look at. We'll talk about. I have indicators. I have a video on that. I have market structure. I got videos on so many things. I'll post some of those. Okay. Don't want to take up any more of your time. Thank you for joining us here at Options Center. A little bit longer video, but don't forget to hit the like button. We will talk to you tomorrow.